So, folks, as we end the week, the big investment theme is the retreat in big growth names, those mega tech stocks that have been on fire for a long time. Profit taking was sparked by concerns over the quality of Tesla's earnings. Of course, it came from selling those tax credits and slower cloud growth at Microsoft. Now, you throw in consumer protection probe at Apple, plus the upcoming Capitol Hill hearings, and the smooth sailing has run into an air pocket. Now, these pockets, though, they've been great entry points in the past, and the question now is, will history repeat itself? Joining me, UBS Private Wealth Management Senior Portfolio Manager, Caterina Simonetti, along with Kingsview Wealth Management CIO, Scott Martin. Caterina, let me start with you. Overall, the sense that, you know, we see these names, and I guess investors have become accustomed to them being up every day. Why now? Why are they beginning to stumble? I'm talking the bigger tech names and the larger growth names.
Of course. And Charles, thank you for having me on the show. Well, tech certainly has been an exciting sector to watch over the last couple of weeks for, really since the beginning of this COVID crisis. And if we look at the long term, we can't ignore the fact that the growth in the tech sector is reflective of the structural changes that were already in place before the situation began. And what we see right now is they're amplified by the stay-at-home narrative and by this current situation that we find ourselves in. And in the tech sector, these changes are just happening faster. But this being a stock picker's market, not all tech is created equal. And more important than ever for investors is to really be selective with what tech companies they go with and to try not to get overly excited by the growth.
You know, I love days like this. To your point, I'm taking notes on the big growth names that are up. You know, Amazon's up, Nvidia's up, or the names that have turned around. Netflix has turned around. For me, these are the kind of days that give me an opportunity, to your point, maybe to find out which names are more vulnerable than others. And Scott, you know, I know that you have not necessarily been as big on tech recently, but this move here, I mean, what can we attribute it to? Or could it be just sort of a D, all of the above?
It's probably an E, Charles, which I would add overvaluation to to those names. You know, I think they just got too far too fast. It felt like 1999 on some of these days when tech would just rocket towards the moon, and they just come down. I think people profit take. I think investors also reasonably look ahead to a couple big earnings weeks coming up in tech land and figure, hey, some of the easy money's been made. And I agree with them. And you're right, Charles. You know, we've still owned tech because we got into these names at Kingsview much, much lower, and we still like them. But gosh, in a market like these, my friends, you got to find value. And I think that's where it's best expressed in your portfolio. And that's why I've liked some of the travel stocks here, as you know, and the banks as well.
And I want to touch on that because what I have talked about, you know, this rotation out of tech, it's going to look messy on the surface because these names, folks, they are so heavily weighted in the major indices that one or two of them can be down and it would mask a whole lot of other stocks that are up. But it should not stop investors from seeking other opportunities. And on that note, Caterina, I want to mention that I know that earlier in the year, you were cautiously optimistic about value outside of these names. Do you still feel that way?
Absolutely. I think that, you know, the cautiously optimistic would be the right way of putting it because we have so many factors affecting this market right now. We're really looking at three major themes. We look at central banks' liquidity, it's an election year, and of course, COVID. And right now, you know, we're dealing with the second wave as, you know, the reality and vaccine is not ready yet. So a number of factors are affecting the market. But having said that, with the slow and gradual reopening of the economy, we also see the pickup in the consumer spending and overall in consumer optimism. And first the consumer spending, then productivity, as all of that falls in place within about, you know, next 6 months, you know, with the presence of the vaccine, you know, we should have some positive results.
Real quick on that note, Scott, you mentioned the travel names. You know, I look at the COVID stuff. Arizona cases came in almost 2,000 less than just 2 weeks ago. Florida's cases may have peaked on July 12th. Hospitalization starting to moderate. Is that what's going to really propel those names that you like those travel names?
Yeah, I think so, Charles. And I think just frankly, the states that have handled the reopenings maybe a little bit better or ones that are further along ahead of the curve are just going to continue to propagate, you know, higher prices in these travel stocks, which if you look at them versus the S&P, they're still trailing huge. So, like, you look at Expedia, which is a name I like. You look at Southwest Airlines, which I absolutely, dare I say, love. LUV is the ticker. Those are areas where I think you can capitalize on those catch-up trades that are going to come through in travel.
Well, Booking's having a good day today. Expedia got an upgrade today, and I'm in love with you, so we'll love it together. Hey, speaking of love, Goldman Sachs, they finally agreed to pay almost $4 billion to Malaysia to settle that scandal that's sort of been haunting them for a while. Wall Street applauded the move this morning. I want to ask you about this, Katerina, because a lot of our guests love the financials, but the financials don't move. I mean, at some point, Goldman Sachs, J.P. Morgan, the financial index, it's one of those oversold, undervalued areas, but it doesn't take off.
Well, it will be safe to say that financials don't love them back. And we have to, as we look at the financial sector, the most important thing to consider is that this crisis is very different from 2008 crisis. This is not a financial crisis. So when we look at banks, banks are well positioned from the capitalization perspective, but at the same time, in the zero rate environment, when it comes to the productivity and profitability of the banks, it's going to take some time. Having said that, we believe that banks and just generally financial sector belongs in any investment portfolio.
Wow. Okay. Maybe one day they'll work out. I'm just being a little facetious. Hey, all right. We're in the middle of earnings season, folks. A slew of earnings overnight and this morning. Almost all of them beat the street. This is when we find out what we want to buy. I mean, so far early in this early earnings season, Scott, has anything jumped out at you? Has there been a new name or names that, wow, that was an amazing earnings report. I've got to be in this stock or start to watch it closely?
Well, look, I mean, there's a handful of them. I don't know if it's all good news, Charles. I mean, Intel's one today that looks like it's overdone to the downside. I mean, Tesla, which we talked about last week and you have talked about all week, I think was interesting in the aspect of the fact that, I've got a massive short squeeze in there. Also really nice, encouraging things going on in their business. So a lot of these earnings moves, though, as an investor, if you don't own these companies yet, you've got to look at price. And when you see prices really get overdone, let's say to the upside, or oversold to the downside, I think those are opportunities to either trim, as we've done, or say add like we've done to Intel here.
Okay. Well, and I've got to wrap this up. Katerina, it's great meeting you. You were fantastic. And Scott, we got to give you a shout out, my man. Gold cracking 1900 today. I'm in some gold, not as much as you. We got into some silver. I want your thoughts on that next time we talk. In the meantime, have a great weekend to both of you. Folks, I want to share a little bit of my knowledge.